I'm monitoring the Middle East war, and I'm asking myself a question. Could a humanitarian catastrophe cause a massive Middle Eastern exodus and trigger a global market meltdown? Pretty dramatic, isn't it? Well, stay tuned. We'll look at Kuwait, Qatar, Saudi Arabian stock markets as they are already under pressure. Magnificent Seven stocks also among the biggest losers in the United States, especially on Friday today, as crude oil gained over 21% in just 2 weeks. We'll also look at stock and the snapback rally for gold, which is looking increasingly likely. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, July 17, 2026. As always, like, share, and comment on this video. Unfortunately, I have a bit of a cold, so you'll have to bear with my crackling voice. If you're a subscriber, stay tuned. We'll be covering lots of various securities, including Bitcoin, market breadth, lots of various ETFs, large cap stocks, especially Kraft Heinz. I have a position in it. And some of the speculative securities, such as a new addition, there's Iovance, Cybin, this is a psychedelic firm, Hormel, and Dentsply Sirona. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com market indicators, price action indicators. You can see on this chart, the green, blue, red, and yellow lines. You can find out more about them by going to MasterChartsTrading.com and signing up there. Okay, let's look at S&P 500 after this dramatic announcement. Generally speaking, not much has happened except today on Friday. We see a drop for S&P 500 of about 1%. There was a valiant attempt. In fact, let me show that attempt to you on the 4-hour chart first, and then I'll go to the 5-minute chart. So on this 4-hour chart, again, I have my indicators. You can see that you can trade. This is a continuous futures, S&P 500 futures. You can see that it was really successful. You just buy and close above the blue line every time you close above it, and then trail higher. Today's action, I mean, it began pretty, how can I put it, hopeful, but it didn't really go anywhere. So this candlestick right there, from today's in the morning, 6 in the morning, it really, it was truly a, looks like a hammer-like candlestick, We dropped significantly. In fact, we dropped right around the previous lows. So it was a normal sort of action. People who are using just price action without the indicators, saw an opportunity there. I have my indicators, so it's pretty obvious where this action is taking place, right around the blue line on the 4-hour chart. Remember, this is a continuous futures. And so we really tried to push higher, but actually at the end of the day, it failed. So let's look at the 5-minute chart, and the price action is telling. So this is the low of the day today. Big rally, pullback towards the red line. And notice what happened. We repeatedly tried to get above this blue support resistance line on the 5-minute chart. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times, 11 opportunities to break above this, what appeared to be a resistance level, and none of them were successful. Finally, we failed and continued lower, so we actually ended up near the day's low. Well, not necessarily near the day's low, but it was definitely not near the day's highs, that's for sure. So that's, you can see the price action quite clearly in this context. On the daily chart, it's not nearly as obvious because we hit records at an all-time highs just recently in June of this year, and pretty much since then we've been trading sort of sideways. But in the morning today, if we didn't have the futures, if we're not looking at the futures market, then we can see that we actually gapped. The same can be seen on the chart of S&P 500 ETF SPY. There was an actual gap down, an attempt to rally, but at the end of the day, it didn't really lead to a successful recapture of the bullish levels by the bulls. So right now, I wrote to my subscribers that I don't normally look at the news as much as I looked today. And the news today was truly disturbing. The reason being is because there was an attack by Iranian, what is it called, IRGC, the Iranian Revolutionary Guard Corpus, right? On the desalination facilities in Kuwait. So if you know about Kuwait, it's basically a desert, and like the entire area of that part of the world is basically a desert. And up until relatively recently, maybe like 20, 30 years ago, not a lot of people lived there. But as a result of this, discovery of oil, exports of oil, lots of money coming into the area, the local rulers were able to create desalination facilities. And those desalination facilities, they absolutely have increased the local population. So what we're currently looking at is stock market of Saudi Arabia. This is an actual index. So Saudi Arabia doesn't look that bad. If you can see it, it's sort of traded sideways. Currently it's what is called a caution phase. So we're right now below this red support resistance line. If we look on a weekly time frame, Saudi Arabia itself doesn't appear like particularly bad, but doesn't appear particularly good either. So it's been pretty choppy ride with a recent attempted a breakout right there, but it seems like this breakout is failing, and we can see that we're already in caution phase, and we could see easily a new bear market. So a new bear market would imply for Saudi Arabia a close below this yellow support resistance line. So if the Saudi Arabian market drops another 2 to 3%, it will be officially in a bear market. Obviously, Saudi Arabia is the biggest player in the region, and what I understand, they have just re-entered the hostilities against the Houthis. This is Dubai. So Dubai also doesn't look particularly terrible, but it also doesn't look particularly good either. So we can look at Dubai. Pretty much traded sideways for most of the last 2 years or so. Another, attempt at a breakout, but right now we're seeing caution. So once again, caution phase for Dubai. Yes, Dubai has come under attacks. As crazy as it sounds, I mean, it's a miracle, truly. Like, there's beautiful buildings in there, and I'm seeing them on TV being damaged. So that is a scary thing to think about. So Dubai doesn't look that good. If Dubai markets drop another, 7%, and for this type of markets, it's not a lot. Again, a new bear market. This is Kuwait. Kuwait, I think, is under the biggest threat because the recent attack on the desalination facilities was in the Kuwait, state of Kuwait. Again, to get to the bear market, it only takes about 2%. Kuwait is not a huge player in the global markets, obviously, but it is still. When I look at this type of charts, this indicate the actual charts with candlesticks. To me, this is actually a better indication of what is actually happening there. Like, I can look at the Twitter feed, I can look at the threads at Facebook, I can even look at Fox News or some other news sources, or even Wall Street Journal. But there is no way that the price can lie. Price does not lie. So the investors, I think, are selling and they're getting out, basically. So the biggest thing today that really worried me about Kuwait is, again, the attack on the desalination facilities. And if you can just imagine that, we have many, many millions of people living in the area who suddenly could find themselves with no water in a desert. That could easily translate into people just deciding to get out. And obviously that would be not great for the economy of the local countries, not to mention the economy, the actual stock performance. So I think the stock performance is reflective of what's happening there. Clearly that is not what the local rulers have envisioned. So right now we're seeing a downward drift for all of the local markets. And of course, the biggest loser right now is Qatar. Qatar is already in a bear market. So notice this close below the yellow line. This implies a bear market for Qatar. So this is an actual ETF, albeit the trading volume is extremely thin for these two ETFs. But nevertheless, they could be traded. So if you're a sophisticated investor, then I would wait for a pullback towards the red support resistance line and then consider selling it short. So I'm thinking that if we even get this pullback, which I actually am not sure we will get a pullback, then we could consider selling this market short using options. For example, you can buy put options once the bounce occurs. But I think in this case, there is a strong possibility there's going to be a breakdown even further. So in my note to clients today, I said that I just want to pause a little bit with buying of stocks. Yes, there are some great opportunities. In fact, some of the many stocks that I'll be covering in the members only section do look pretty good, and they are actually giving us a buy signal. But I am somewhat worried, and again, I am not the one to worry about the news, but in this case I am worried about the news, because water is literally the only thing. You cannot drink oil, you cannot eat money, but you definitely need water, and you can only survive without water for 3 days, and in the desert it's probably even less. So this conflict that we're witnessing is seriously unnerving me. Before one of the videos when the February hostilities between the Iran, Israel, and the United States broke out, I immediately said that this could lead to horrendous complications throughout the world because of price of oil. But in this case, we're seeing direct evidence that this is already, impacting local economies due to perhaps outflow of people. Obviously, there's already refugees. Those who can afford to live already have left, most likely, and those who cannot yet afford may end up in a very troublesome situation, caught between fighting and lack of drinkable water. So this could get very, very bad very, very fast. What do you think? Am I panicking? Perhaps I am, but just let me know what you think. In the United States, we're looking currently at the Magnificent Seven. So Magnificent Seven currently consists of Google, Apple, Amazon, Nvidia, Tesla, Microsoft, and Meta. And this was one of the biggest losers today. So it lost almost 2%. This is a ETF, you have to remember. So some of those stocks lost even more. Again, it was a gap down. We had a gap down, and we didn't really recover this at all. So not a good sign. Technology is suddenly weak. Other technology sectors also somewhat underperforming, like XLC, for example, which is a communication services sector. You can see a nice big gap here. XLK, technology sector, also dropped. So overall, technology doesn't seem to be doing well currently. Not necessarily it's going to continue, but this is something to take seriously, I think, at this point. Semiconductors, same thing. We're seeing a weakness in that sector as well. So as far as stocks are concerned, this is all I wanted to say. Let me know your thoughts about the entire Middle East situation in the comments, and how you think this would impact the local economies as well as the world economies as well. Crude oil has gained significantly over the past 2 weeks as the hostilities have resumed. Today we're seeing a high, 2-week high. Now, this chart doesn't look like horrendous yet. If or when we spike again above this blue support resistance line, which is at $95, then I would really start to worry. Right now, what we're seeing an approach to the gap area. So there was a gap between Friday the 12th of June and Monday the 15th of June. Somewhere around $82, there's that gap. So we're pretty close to that area already. And I think at this point there will be at least some attempt to stop this upward trend. However, if I read the news correctly, I understand that there's going to be disruptions not only now in the Persian Gulf, but also in the Red Sea, and the passage of tankers through the Suez Canal also could be impaired as well. So the oil flows through those two very important choke points could become even more constrained. And so right this instant, I don't see a end to these hostilities unless something just dramatic happens and suddenly there is an understanding of some sort, maybe another memorandum of understanding. What I understand about that first memorandum, it was there to just stop the fighting temporarily. But overall, there was really no understanding. It was more like we're just gonna keep fighting. So unfortunately, the way things are going, I don't see a very easy path forward. So unless something happens and we kind of roll over in this gap area, I think we're going to continue higher. Maybe we'll trade a little bit sideways and then continue higher. We can put in a ghost feed and see if my prediction will be correct or not. So I'm thinking something of this nature. Like that, maybe. So I'm guessing somewhere around September, maybe even earlier, maybe around August, we might get to the $100 area, because it just depends on how quickly things unravel, especially in the Red Sea. Unfortunately, I think that's my prognosis. So again, let me know in the comments. Let's switch gears a little bit. Currently, we're looking at the US dollar. So in real time, like somewhere around end of June, I put this arrow here that's saying that yes, we're going to pull back. We've been pulling back more or less. I'm not sure we're done with this pullback. I think there's going to be still a pullback for the dollar. So the dollar is important because we do trade gold and gold miners. So this pullback for the dollar didn't really translate into a sizable rally for gold. That usually should happen. Why? Because gold is traded in US dollars, as gold divided by US dollars. It did not occur, and right now we're still, in a bear mode for gold. So this downward facing arrows, there are actual places where I would consider selling it short. Now, having said that, I think dollar would most likely continue to pull back, and another, maybe 1 to 2% down, perhaps. And gold should take advantage of it. So I think a bounce for gold is quite likely. So something of this nature. But I don't know if gold is done. I think gold is in a bear market, so I think it will roll over eventually once we see a top-in pattern for gold. Right now, I don't see a top-in pattern for gold, and I don't see a bottom-in pattern for gold either. Gold miners actually looked a little worse. You can see that they broke below previous lows on 16th of July here, made another low today relative to previous lows. So gold miners are even weaker. The indicators are also kind of curving up. So this makes me think that a bounce is likely, and it's quite likely that it will follow the indicators, sort of something like that. But then again, I think there will be a rollover to the downside. And all of this is predicated on the fact that dollar is in an uptrend. So strong dollar will weigh on precious metals. Silver, you can see, also broke down quite nicely. This alert, well, this was not an alert. This was just a note to my subscribers. But yes, this would have been successful. So you could have shorted silver around 68.50, and you already made good money at around 55. So especially with leveraged trades. So silver is the same thing, but it's more volatile. If dollar decides to, like I said, continue with a pullback, then gold, silver, and gold miners will at least bounce. But I think the bigger direction for this complex, for gold, silver, and gold miners, is down. And that's it for this week's recap. Please let me know what you think in the comments. At least put a thumbs up in the comment. Share this video. Just put it on your social media profile. See what other people think about it. And of course, don't forget to like this video as well. Once you do that, please head over to MasterChartsTrading.com. Again, I have two different products and one bundle. So trading indicators are these lines in the chart. As I showed, for example, here on the 4-hour chart, you can trade this type of stocks, a continuous security, on 5-minute chart also. And this is exactly the type of price action that I really enjoy watching. You can see that there was clear resistance here and then a rollover. So you can use my indicators as resistance, as support resistance, or as a trend indicators. They work both ways. These indicators are available for this interface, TradingView.com. The TradingView.com interface is free, so you can get TradingView.com. Just sign up for free on TradingView.com. Come back to my site, Master Charts Trading. Sign up for my indicators, and I will open the door for you so you can see my indicators on your chart on TradingView.com. Newsletters, I send out daily alerts and weekly members-only videos for various securities that we trade. So, for example, this week we'll be covering all of these ETFs, large cap stocks, as well as speculative securities. The best deal is to get both trading indicators and newsletters, and especially the best deal is to get them on a yearly basis, because you will save 2 months off from the equivalent price if you were to buy them on monthly subscription. You get free 7-day trial, so you have time to check it out. Let me know if you have any questions. Thank you for watching, and have another great trading week. Bye-bye.